In a world just overflowing with information, and these ever-evolving markets, how do you actually get informed quickly? How do you gain a real edge?
Yeah, that's the key question, isn't it?
Today, we're taking a deep dive into a firm that I think really embodies thinking and acting outside the bank.
That's right. This deep dive is all about Asymmetric. They're an investment firm making some serious waves. And they position themselves as something, well, pretty unique. Not just another crypto fund,
Right.
They call themselves a technology company investing in technology companies. And, maybe even more fascinating, a macro shop dressed up in crypto clothing.
Okay, hang on. Before we go any further, we absolutely need a crucial clarification here. This is really important.
Yes, definitely.
There are actually two well-known firms using the name Asymmetric.
Correct.
For this deep dive, everything we talk about relates only to the crypto-focused firm. The one founded in 2022 by Joe McCann, based out in Portland, Oregon.
That's the one.
We are absolutely not talking about Asymmetric Capital Partners.
Yeah.
That's the one founded back in 2020 by Rob Biederman over in Boston. Totally different focus.
Yeah.
Traditional B2B tech VC.
Good to get that clear right up front.
Yeah.
Very different firms.
So our mission today is really to get inside the unique strategy of Joe McCann's Asymmetric. It's multi-layered, and it's led to some, frankly, remarkable results.
Yeah, truly remarkable. And the goal is for you, the listener, to walk away with a clear understanding of their distinct approach, from the leadership to their core investment ideas, and really why they've been so successful.
Okay, let's unpack this, starting right at the top. The architect, Joe McCann himself. This isn't some, overnight success story popping up in the last bull run. This guy has over 25 years of experience.
A long time in these markets.
And it's a really rare blend. You've got deep Wall Street quant trading. He was the head of quantitative trading at Passport Capital.
Right.
And then he pivoted into Silicon Valley tech leadership. Senior director at Microsoft Cloud plus AI, even co-founded and led NodeSource, an open source startup.
Yeah.
Had a successful exit there in 2019.
And what really stands out, I think, is how deeply crypto native he is and for how long. Way before it was, mainstream cool.
Since 2016.
Yeah, investing in Web3 startups, actively trading crypto since 2016. He's advised dozens of startups. He's even, contributed code directly to Solana's Anchor developer toolset.
Wow. So not just talking the talk.
Not at all. It's a deep technical grasp of the underlying tech. And the dual expertise, right? The Wall Street quant discipline fused with that Silicon Valley operational tech insight. That's really the blueprint for how Asymmetric operates.
It lets him speak both languages fluently.
Exactly.
And he's certainly not doing it alone. The team around him seems just as impressive and kind of perfectly suited for this hybrid approach.
Absolutely. Take Dan Held, for instance. He's a general partner, leads their dedicated Bitcoin DeFi venture fund day.
The Bitcoin educator guy. Huge following.
That's him. Over 850,000 followers on social media. But he's also a serial entrepreneur. 2 successful exits himself Interchange, acquired by Kraken, ZeroBlock by Blockchain.com.
That's quite the resume.
And get this, Heldog was actually part of the original, 2013 San Francisco crypto meetup group.
No way.
Yeah, alongside founders who went on to create Coinbase, Ripple, Kraken. Imagine being in that room back then.
That kind of deep early network and understanding, that's invaluable.
Truly.
Okay, and then for the operational backbone, they've got Nikolai Onkin as CTO, ex-AWS engineering lead.
Yep, led engineering teams, Cloud9 IDE, which AWS acquired, and he set up and scaled AWS's Amsterdam office. Serious tech chops.
And Travis Adelman as CFO. Scaled tech companies, including NodeSource with McCann, and was even VP of Finance at Walmart.
Right.
So what does bringing in that kind of specific talent, the AWS lead, the Walmart finance guy, actually do for a crypto investment firm?
Well, it speaks directly to how they define themselves. Remember, a technology company investing in technology company.
Oh.
They've built their own proprietary infrastructure, custom software for portfolio management. They've even automated their LP, the limited partner onboarding.
So serious plumbing.
Serious plumbing. Onkin's background ensures they can build and maintain all that complex tech. And Adelman, he brings that crucial institutional financial rigor, the kind of discipline you expect from TradFi, from traditional finance.
It sounds very deliberate, like an architecture designed for a specific edge.
Exactly, a competitive edge in a very tech-driven market.
So, okay, you've got the visionary leader, the stacked team, the tech infrastructure. What's the core idea, the driving principle that lets them navigate this, let's be honest, incredibly volatile market so well? It's kind of baked into the name, isn't it?
It really is asymmetric payoffs.
Explain that. What does asymmetric mean in their context?
It means looking for opportunities where the potential profit, the upside, just vastly outweighs the potential risk of loss, the downside,
Yeah.
seeking that positive asymmetry. Limited downside, but truly outsized, almost explosive upside potential.
And they have a pretty famous, almost unbelievable example of this with that Solana meme coin, BONK.
Ah, yes, the BONK trade.
This is where it gets really interesting, right? They identified BONK when its market cap was just $28 million.
Tiny, in crypto terms.
For most people, that sounds like just throwing money at a meme, a pure gamble.
See, but that's where the deeper analysis comes in. It wasn't just a random gamble for them.
How so?
McCann publicly compared that $28 million market cap to the peak market caps of previous cycle meme coins. Think Dogecoin at, what, $85 billion? Shiba Inu at $48 billion.
Huge numbers.
Right. So from their perspective, the potential upside, if BONK captured even a tiny fraction of that kind of attention and value, well, it was potentially orders of magnitude greater than the capital they put at risk.
So it wasn't about the meme itself necessarily.
It was about identifying a quantifiable, limited downside opportunity in a market driven purely by attention. It kind of redefines calculated risk for this digital age, doesn't it? Shows discipline can exist even in what looks like chaos.
Okay, that BONK trade really does illustrate the asymmetric idea perfectly, finding those huge potential wins. But what makes their whole approach distinct is how they find these things. They aren't just like staring at crypto charts all day, are they? They describe themselves very differently.
Exactly. And this is where that unique self-description comes in. A macro shop dressed up in crypto clothing.
Right. Explain that connection.
They don't see crypto as this isolated little sandbox. They actually use crypto assets as a tool. A high beta, highly expressive financial instrument is how they put it.
High beta meaning?
Meaning it tends to move more, amplify the moves of the broader market or specific trends. It's sensitive.
Okay.
So they use it to articulate their views on big global macroeconomic trends. Joe McCann is constantly tying their strategy back to global liquidity cycles, central bank policy, even stuff like U.S. election year dynamics.
So give me an example.
Okay, like their bullish stance in mid-2024, that wasn't just because, Bitcoin halving or something. It was informed by things like softening employment data in the U.S., signs of increasing global liquidity. The crypto investment was the expression of that macro view.
So crypto is the medium, but the message, the underlying thesis, is macro.
Precisely.
Calling themselves a macro shop dressed up in crypto clothing, though. It sounds almost like a contradiction to some people. How do they actually bridge that gap, between the established, often slow-moving world of global macro and the, hyper-volatile, narrative-fueled crypto market? Does that create tension, or is it really seamless?
That's a really good question because it's right there at that intersection where their edge seems to lie.
How so?
They aren't trying to force crypto into some old school macro model. Instead, they recognize crypto's unique sensitivity, that high beta thing we mentioned.
Right.
It amplifies broader market moves.
Yeah.
So when they develop conviction on something macro, say, they believe global liquidity is about to increase. They express that view using crypto assets.
Why crypto specifically?
Because crypto can react much faster and often with much greater magnitude than maybe traditional stocks or bonds or commodities would to that same macro signal. It's about picking the right tool, the most sensitive instrument, for their specific read on the global economy.
Okay, that makes sense. Using crypto's volatility to their advantage based on a macro thesis.
Exactly.
So the macro view sets the stage, and then within crypto, they make these high-conviction thematic bets. Let's get into those. First up, Solana. They see it as the fastest horse, right? Better than Ethereum now, in their view.
That's their stated conviction, yeah. They believe it surpassed Ethereum in terms of performance and user activity. And this belief drove a really significant strategic bet on the whole Solana ecosystem.
Especially after the FTX collapse, which is interesting.
Right. While many were fleeing, writing Solana off because of its close ties to FTX and Sam Bankman-Fried, Asymmetric saw it completely differently. They viewed it as a moment of maximum fear.
And therefore?
Maximum opportunity. That's their asymmetric thinking again. And the BONK trade we discussed, that was a direct result, a derivative of this core Solana conviction.
How so? Connect those dots.
Well, they recognized that Solana's superior user experience, faster, cheaper transactions, attracts a certain type of user.
Hmm.
The very active, often risk-tolerant traders, the so-called Degens.
Okay.
And those are the users who tend to gravitate towards things like meme coins. They're quick to jump on new trends.
Mm-hmm.
So investing in DNK wasn't just a bet on a meme. It was a capital-efficient way to bet on the entire Solana ecosystem roaring back to life, attracting those key users.
Huh. That's a layered approach. It's not just by Solana.
No, much more nuanced.
It's interesting, too, that they also emphasize Solana's blend of technology, capital, and culture. They talk about musicians, Lollapalooza sponsorship, organic projects popping up. Why is that culture piece so important beyond just the tech specs?
That's a great point, because ultimately technology alone rarely gets you true mainstream adoption. Culture creates stickiness. It builds a community, a sense of belonging. It pulls in users who aren't just there for the quick financial gain. Think of it like building a brand, an identity that people resonate with. Solana isn't just code. It's fostering this vibrant movement.
And that leads to real network effects beyond just transaction counts.
Exactly. That's how these ecosystems become resilient and grow organically over the long term.
Okay, next high conviction bet. This one might seem counterintuitive for a lot of traditional folks. Meme coins. They see them as monetized attention, a legitimate asset class.
Yes, and this is where their pragmatism really shows. McCann is very clear. His job is to make my limited partners money. Full stop.
Okay.
And he sees meme coins as a viable path to doing that. The core idea is that these things are basically a new way to capture and monetize internet attention, virality, cultural moments.
Well, like digital collectibles capturing zeitgeist.
Sort of, yeah.
Yeah.
And he argues their proliferation is actually a net positive because it generates activity and brings users into the broader crypto market. He even has this framework, depression or dog coins to a trillion, meaning he theorizes that in a hypothetical future $10 trillion crypto market, the meme coin category alone could reach $1 trillion in total market cap.
Wow, that's a bold call. But hang on, they can't just be blindly chasing every new dog coin that pops up, right? You mentioned discipline earlier.
Absolutely not. And this is critical. They have what they call an unheard of strict concentration limit. For any investment outside the top 20 crypto assets by market cap, they will not allocate more than 2% of their total assets under management, their AUM.
2%. That sounds like a serious safeguard. But couldn't that also limit their upside? You know, if they find the next huge thing really early, they can only put 2% in. How do they balance that discipline with hunting for those moonshots?
That's a very fair question.
Yeah.
And the key is understanding the purpose of that rule, especially for trades like BONK.
Okay.
It allowed them to take that highly asymmetric bet, tiny market cap, huge potential upside, while ensuring that even if BONK went completely to zero,
Which it could have.
which it absolutely could have, it wouldn't materially damage the overall fund's performance. It's applying that TradFi risk management thinking to a hypervolatile crypto asset.
So it contains the downside risk, primarily.
Precisely. They tend to focus on what they might consider blue-chip meme coins anyway, ones that have already achieved some scale and staying power, not necessarily the absolute newest, riskiest microcaps, and that 2% limit lets them participate while sleeping at night. It doesn't necessarily cap the absolute dollar upside if a position grows significantly, because they can choose how and when to scale out.
Got it. Discipline and chaos. Okay, third major theme. The Bitcoin DeFi frontier. They've made a big dedicated bet here.
A very significant one, yes. It's formalized through a whole separate fund, the Bitcoin DeFi Venture Fund 1.
And Dan Held, the Bitcoin educator guy, leads this.
He spearheads it. His conviction is that Bitcoin, being the oldest, most secure, most decentralized network, is the ultimate foundation, the most dependable, reliable, solid foundation, and therefore the most solid asset collateral for building decentralized finance applications.
Interesting. So DeFi on Bitcoin, not just using Bitcoin as collateral elsewhere.
Exactly. They're investing in the infrastructure to make that happen. Things like BOB, which stands for Build on Bitcoin.
What does that do?
It aims to combine Bitcoin security with EVM programmability. That means developers familiar with building on Ethereum can create similar smart contract apps, but secured by the Bitcoin network itself.
Bringing Ethereum-style functionality to Bitcoin's security layer.
You got it. They're also backing Mezzo, which calls itself a Bitcoin economic layer, focused on generating yield directly on Bitcoin. And Say Network.
Say, that's a layer one, right? Like a whole new base blockchain.
Correct. It's a layer one blockchain, but it's purpose-built specifically for trading. Ultra fast. They boast something called twin turbo consensus. designed for sub-second transaction finality.
Sub-second. Wow.
Yeah, imagine a network settling trades almost instantly, perfect for high-frequency strategies or complex DeFi protocols that need speed.
Okay, so across these themes, Solana, meme coins, Bitcoin DeFi, you see this blend of macro insight, specific crypto conviction, and deep tech understanding. How does this all fit together in terms of how they actually structure their funds and manage risk day to day?
Right, it sounds complex, but it's actually a pretty elegant dual-arm strategy. They call it symbiotic.
Symbiotic. Oh.
They have the high volatility fund, the HVF. That's their liquid long-short hedge fund. Think of it as their real-time market sensor. It's active, can use leverage up to 3x notional, meaning 3 times their actual capital.
Okay, the trading arm.
Basically.
Yeah.
Then they have the illiquid venture capital funds, the Mean VC Fund I, and that specialized Bitcoin DeFi Venture Fund I. These make early-stage, long-term bets.
So public market trading informs private market investing.
And vice versa. It creates this powerful information feedback loop. Insights from what's happening in the liquid markets, the HVF, can inform their private venture investments. And understanding the tech trends from their VC deals can give them an edge in their liquid trading.
That makes a lot of sense. And that TradFi discipline you mentioned before that underpins all of this.
Absolutely crucial. It's woven throughout. They do active hedging to manage risk. They monitor their net asset value, the fund's total worth in real time. They maintain high liquidity, claiming a 24-hour exit capability if needed.
And that 2% concentration limit again?
And that critical 2% limit for smaller cap assets.
Yeah.
It's a core differentiator, truly, in the crypto space, where historically, let's be honest, risk management wasn't always priority number one for some funds.
Yeah, understatement maybe?
This discipline allows them to take those calculated asymmetric bets, even in things like meme coins, without exposing the whole fund to, catastrophic failure. It's how they can chase BONK without abandoning their core principles.
And the results, I mean, they really do speak for themselves. A 202% gain in the 12 months ending March 31st, 2024.
Astonishing number.
For most people, that sounds like, I don't know, a typo or something out of a movie. How do they generate that kind of return while still maintaining all this discipline you're talking about?
Well, it's definitely not luck. It's like that MasterChef analogy, right? Perfectly balancing intense spice with comforting foundations.
Right.
That 202% wasn't just one lucky bet. It's proof that their whole integrated system was working. The macro call was right, the Solana thesis played out, the tactical BONK trade hit big, and it was all contained within that rigorous risk management framework.
And putting that number in context.
Get this. According to Prekin data, that performance made Asymmetric the #1, the best performing hedge fund globally, across all asset classes.
Not just crypto funds.
No, all hedge funds.
Period. That's a huge statement.
Wow, okay. And they also co-invest alongside top-tier crypto VCs, like Coinbase Ventures, Multicoin Capital.
Yes, which really speaks volumes about their standing in the ecosystem.
Yeah.
It shows they have access to high-quality deal flow and are seen as serious strategic partners, not just opportunistic traders flipping coins.
So if you connect all these dots, the performance, the partnerships, it really validates their whole unconventional approach, doesn't it? It absolutely does. It demonstrates that this blend, the Wall Street discipline, the Silicon Valley innovation mindset, and that deep native crypto understanding it can yield truly extraordinary results. It potentially redefines what's possible in investing in a new asset class like this.
Okay, but no firm, no matter how successful, is immune to challenges or future uncertainties. What are some potential hurdles or things we should watch out for with Asymmetric going forward?
Sure. Well, some challenges are just inherent to the market they're in. They're obviously dependent on crypto market cycles, which remain highly volatile.
True.
Regulatory uncertainty is a big one, especially in the U.S. New rules could definitely impact how they operate. And as their assets under management, their AUM grows, scaling becomes an issue. Can they maintain this edge and agility with a much larger capital base and to grow the team, the infrastructure?
And what about key person risk? Joe McCann seems pretty central.
That's definitely something to consider given his visionary role and how much the strategy is tied to his specific blend of expertise.
So what signals should we, or maybe more importantly, you, the listener, watch for to gauge their future path?
Good question. Keep an eye out for announcements of new funds or maybe new major thematic bets. Could they get into the intersection of AI and crypto? Or maybe deep in decentralized physical infrastructure networks?
What's he deep in again?
That's using crypto incentives, essentially, to build out real-world physical infrastructure. Things like wireless networks, energy grids, sensor networks. It's a growing area.
Interesting. Okay, what else?
Definitely watch for the maturation of their current venture portfolio. Seeing successful exits from companies like BOB or Mezzo or Say would be huge validation for their early-stage bets.
Proof the VC side is working.
Exactly. And finally, any significant team expansion, especially at senior levels, would signal their growth ambitions and maybe hint at new strategic directions.
Okay, so wrapping this up, what does this all mean for you, the listener, trying to navigate these complex, fast-moving markets?
Well, I think Asymmetric story, their unique blend, the Wall Street discipline, Silicon Valley innovation, deep crypto-native insight, it isn't just their formula for success.
It's maybe something bigger.
Potentially, yeah. It could be a blueprint for how sophisticated investment firms, maybe even individual investors to some degree, will need to operate in the future as technology and finance become even more deeply intertwined.
So the final thought we want to leave you with is this. What does it truly mean to think outside the bank in this digital age? And how might this kind of hybrid, tech-savvy yet disciplined model redefine what's possible in investing? Maybe even for you.